Geoff Dennis is back with us. Let's take it across to him to get in his perspective of the ongoing tariff wars between Washington and Beijing. Geoff, hi. Just want to understand, is the cautiousness among investors justified amid the uncertainty that still looms large with respect to what will be the conclusion of the negotiation and the talks between the leaders of United States as well as China?
Yes, we've had a very strong start to the year, of course, in terms of emerging markets and indeed markets generally, global stock markets. And I think part of that has been the gradual sense that perhaps the trade war was coming to an end. And now I think what investors want to know is that's actually going to happen. And yet, as you said in your original question to me, there's a lot of uncertainty about the timing of that. So I think with the global economy slowing, with markets having rebounded very nicely from their December low, we need to know the tariff, the trade war, I guess, is going to be concluded with an agreement. And the problem is there's no timeline on that. So markets are just a little bit nervous at the moment. But my own view is there will be a resolution of the trade war. There will be a settlement. Both countries, the U.S. and China, need it for their economies. And therefore, I think this is probably only a pause in the markets.
Let's also talk about many factors are responsible for ballooning trade deficit for the United States. It's hit a 10-year high as well. Just want to understand, why can't Trump cut the trade deficit with China? Because clearly there was a fair bit of export and import happening with the country, and given the trade war and the trade tension, it only seems to have worsened.
Yes, well, and I posted something on online today about this. The problem is that paraphrasing this quickly, the U.S. trade deficit is determined by the gap between savings and investment, and you had a enormous tax cut at the end of 2017, a very irresponsible tax cut in my view. And what that's done is stoked U.S. economic growth, including on the consumer side. And that's really what's fundamentally, from a macro point of view, is driving the increase in the trade deficit, because the U.S. economy had a very good year last year compared to prior expectations. Now, there'll be some short-term factors, such as importers pulling goods in before the tariffs came in. You've had, of course, retaliation for the Chinese, especially in the agricultural sector, which has led to lower exports. You've had a strong dollar, which is obviously going to impact exports. But the bottom line is the U.S. trade deficit will not go down until the economy slows and you get a better balance of savings and investment. And so, frankly, the tariffs have failed, and rightly so. They are a bad policy. I think what will probably happen this year is the tariffs will be removed ultimately, the economy will slow down, and the deficit will actually fall. The tariffs are a policy mistake as far as I'm concerned.
But it seems like a situation of devil and the deep sea, because if the economy slows down, then again there's jitteriness among investors and people who are monitoring the markets and macros, right?
Yes, I think that's right. I mean, clearly there's a big gap between the very strong growth of last year and a full-fledged recession. My base case continues to be a much slower U.S. economy, but one that does not slide into recession. And if you get a slower economy, the Fed will then go on hold, which is also my call. The dollar will fall, and there will be some benefits, I think, for markets, especially outside the U.S., including emerging markets, from that sort of scenario. So, but you can't rewrite the laws of economics. The only way you're going to eliminate these U.S. trade deficits is by having a much more equal savings and investment balance in the U.S., which requires slower domestic demand in time, and that is not the thing that's going to happen when the U.S. has such expansionary fiscal policy, which has just been made worse by these big tax cuts from the U.S. I don't think this means the U.S. market won't go up this year. I just think it means other markets will go up more.
Okay, makes sense, Geoff. And as always, pleasure chatting with you and getting in your insights on what's happening globally and geopolitically. Thanks much for joining us.